Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here, and it is what the heck is it? Tuesday, November 4th at 8:32 a.m. EST. 2 minutes late? Oh my gosh, so terribly sorry. Yeah, man. I did say yesterday in the weekly report that we might see a gap fill, right? So if the algos were kind of disobeyed, the NASDAQ is really tricky. Okay. And the reason it's tricky is because it tends to get held up until a pullback is needed. And pullbacks are often needed. And in this particular case, I did say yesterday we could see a gap fill. So let's talk about that a little bit. Then we're going to talk about Bitcoin, and we'll probably talk about eurusd or anything else that anybody wants to talk about in the comment section. Mick, good morning. Always good to have you on, sir. So that said, let's go ahead and take a look at what a gap is, why it matters. This is a CME gap. This is the NASDAQ 100 E-mini futures, right? This is on the CME. It's a 3-hour chart. And on Sunday, the 6th, there's a big gap up on the open. That means that price really took a massive leap up. There was nobody to sell and only people buying. So the price bid up from 25,574 all the way up to 25,700. And it's a sizable gap, very notable. It's not the biggest gap in the world, but it's a gap, and CME gaps almost always get filled. What does that mean? Price tends to come back down. There's a bit of an inequality created by this gap in the market, if you will, a mathematical inequality, a buyer versus seller inequality. And so price tends to come back down and revisit those prices. And so far it did that. Now, again, I had a lot of different scenarios on the NASDAQ yesterday. It wasn't like I predicted this and said nothing else was going to happen. I just said this was a possibility before it heads back up. Now, of course, there's always the chance that we see some risk off and NASDAQ continues down. I'll take a brief look at the algos here. I mean, there is reason for the NASDAQ to continue down a bit. If anything, we'll see a gap fill and then perhaps price goes sideways for a bit. We'll see. I don't think price is going to go below what I considered a relatively hard floor of 25,396. So we might see price fill this gap, go up a little bit sideways, maybe grab this, maybe not, and then head back up. Now, the NASDAQ and most of the indices do tend to grab those prior highs from prior moves on the way up, right? So if you really zoom out going back through the summertime, you'll notice that we had a high before the China tariff tantrum, and then it went ahead and broke that high and made its way back up. Now, it does tend to come back down to grab that high as well. So we might see some movement down until we see 25,400 grabbed, and then price continues up after that. That's just how it works. Usually, not always, but I think always. I never say never, never say always, but there you go. So now, let's see here. Okay, good. Just making sure everything is firing off on all cylinders, and we do have people watching, so on and so forth. Let's move on to Bitcoin. A lot of people are worried that the bull market is over, and it could be. Let me zoom out a little bit, and just a quick review for everybody. I didn't cover the macro on the weekly update. Okay, so guys, first of all, take a quick break, get the free algo. Link is in the description right there. See that? And if you get that algo, I'm going to also send you a weekly market forecast that I do. I did miss a couple weeks there just because I had some personal family matters to handle last week and the week before, but this week I got it out, and I think that's like the first time I've missed a week in ever, or at least a really long time. So what we're looking at on the macro for Bitcoin is, I have been saying for probably a year or more that my prediction for the top of the cycle is going to be anywhere between 120,000 and 160,000. Price pierced that twice. Okay, so price pierced it back 3 times, really, back in July, again in August, and again in October, early October, and price has gone down ever since. Okay, so does that mean the bull market is over? No, but it could be. Does it mean that the bull market will continue? No, right? We're in that time when, at least per my metrics, mostly based on high time frame Fibonacci extensions, we're seeing the requirement met, if you will, for my own metrics that the bull market could be over. Now, could price continue up? Sure, certainly. The 4-year cycle does have some similarities, some patterns. It's not always the same, but so far there have been, I think, 3, or maybe this is the end of the 4th 4-year cycle being completed. And when that happens, price makes a high, heads back down about 85%. So let's just say 120, 120, 126,000 was the high. What's an 86% drop from that? You're gonna have to go a little, here it is right there. 85, we'll say. I think it actually goes a little bit deeper. We'll just say 85. 85,000 or 85% drop from 120,000. Oh boy, that is $20,000. Now, I don't think price is going to go that low. It could. I think it's a really good probability the price will go sub 30K. There is some pretty decent support starting around the 50,000 level, right? So 50,000 might be where we see the price go to. My kind of prediction for the bottom. Now, again, price could continue up, which would raise this 85%, sort of bottom. Let's say price goes to my sweet spot, which is 145,000, then an 85% drop from there is going to be about $20,000. So either way, it's pretty brutal. And some of these drops exceed 85% on the bear. Now, this time might be different. Those are famous last words for traders, though. You must understand, traders must make their decisions based on a couple of things, but most importantly, the history of the way the price of an asset behaves and said asset class, right? And the history would tell us that price would go down that low. Okay, well, what was the prior bear? Was it about 15,000? So it may be that gets bought up before we even reach 20. It's really hard to say. I do think that between 20 and 30,000 is a fair bear market price. And that would probably take, oh gosh, I did this all before, but I think it's like 400 days between the peak of the prior bull market and the bear. We'll just do that really quick. Just a quick little back test. Okay. Now, I'm not saying that the bull market is over, right? I'm saying it could be. But if that were the case, you're looking at about this, in this case, 362 bars for that 2017 peak to trough. This one's arguable. It's a weird double peak due to economic things, maybe. So it's either 600 days or, again, about 400 days. So if I were just to say 400 days, and let's just say that this was the peak, and it may not be, but if it were, 400 days out, it's going to be around this time next year, right? It'll be about a year from now that we see the bear and the bottom of the bear, if that were the case and if everything holds. Now, we have new things happening. We have BlackRock et al. Really buying in deeply and publicly, so price may not even make it down that far, or it may make it down farther as a result. We really don't know how all that's going to work, but what we do know is that price does seem a bit bearish at the moment and has broken below this particular support sitting at 107,000. What it has not done is gone below 100,000, and in a very key important respect, not below 97,000. If price goes below 97,000, stays there for more than a week, I will start to think the bull market is over. However, we do have a lot of other metrics to pay attention to. Those metrics have not yet been met. I do hear a lot of people saying that they think the bull market is over, and those also can be very famous last words, right? I've heard that a lot of times. So you just got to watch out for that. Now, one thing I will look at here, if we look at the weekly chart, is this the weekly? No, that's the weekly, is we have a double peak, and this right here is a bit of a bearish look. When you have on the weekly chart the MACD to continue to be bearish despite a double peak, that is a problem, especially if that peak is higher. That is a divergence. That's exactly what that is. That's a big divergence, right? And we are also seeing a bearish and bullish divergence at the same time. But the key here is, back to that chart, sorry, didn't mean to get away from it here. You have price making two highs, and one high is higher than the second high is higher than the first, right? So if I just drew a line at those two highs, what you're going to notice is that, and you could even have this high before that, making the same sense, be a bit redundant, but those two highs happened, and even though the second high was higher, you have a very bearish look on this MACD. Not only that, we have some other metrics that are saying the same thing, like the stochastic RSI. You have a higher peak here, and then you have a lower peak on the stochastics. That's a very bearish thing. That's a diversion. Now, not to say that this means the bull market is over. It's just another thing stating, hey, you know what? Maybe it's over. Could be. If that's the case, then of course you're going to see what you usually see is a form of complacency where price will play around at some level, maybe 90,000 or something, and everybody thinks price is going to go up again, and the altcoins start to really go, and you see this kind of stability in the price of Bitcoin for a matter of anywhere from 2 to 6 weeks historically, and then you start to see the altcoins pop off, and when that calms down, it's pretty much done. And of course, this time might be different in that we don't see that at all. So it's hard to say what's going on with Bitcoin. I know a lot of people want to know whether or not the bull or bear, whether or not the bear's coming, bull's over. Figure we just address that really quick here on the live show. So that is all the time we have for the live show, though, unfortunately. So what we're going to do is we'll talk about the eurusd and what's going on with that privately in the private live lab. So before I click off here, get your free algo links in the description. What I do with that algo is I build it right in front of you, and it's an algo you're going to have to optimize. It's not quite ready to trade because what are you going to trade? And whatever you're going to trade might behave differently to, whatever, I'm trading with it, right? So it's not ready to trade until you optimize it. We can teach you how to do that. But in the meantime, that video is going to teach you how to turn your algo into code using Grok AI, and then how to, just going to show you what a lot of traders are using as far as like software solutions to connect their algo to their exchange so that they can have the computer trade for them while they're not sitting at the computer, right? So that's kind of the dream, is what people want to do, and we show you how to do that. Thanks for watching, everybody. We're going to catch you on the flip side. We'll be back tomorrow, 8:30 a.m. EST, as usual, and leave any questions, comments, whatever in the comments section. Like, subscribe, do all that stuff, and we'll see you mañana.